following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, Monday through Friday, 11 o'clock till noon, Eastern Time, that is. And let's see, we've got the mic check. My engineer and I, we've been missing our timing here. Yep, we got the mic check. All right, let's go to the nitty-gritties, and thank you to our wonderful hosts from early this morning, 8 o'clock, John Logan, Larry Pesavento, Tom and Tommy. I hope I can give you as good an hour right now. And then you've got Wednesday, you've got Think or Swim, you've got your swimming lesson, you've got Steve Rhodes, Dave White, Tom O'Brien for 2 hours. Just a lot of programming here at TFNN. Education is what we're all about. Now, there's a pattern that I call the Chapman Wave Falling Axe. And basically, it looks like this. Let me just draw it in here. I'll draw a little kind of a template right here. Let me make that, let me get my pointer, make that a solid line. Style, single line. Make it a little thicker so you can actually see it. And I'll get two of them. So let's just add that and add that. So what do we have? We have a pattern that looks very much like an axe. There's a long handle right there. Long handle, and then you make a series of, if I can find it, it's hidden there, or I'll just do another one here. Look at this. And then there's a series of lower highs and lower lows. Just keep it as simple as possible. This is the schematic or the template that we're going to use. And basically what happens is price goes up, 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 up. It's got nothing to do with peaks or troughs. It's just basically you're looking at a series of higher highs, and then it stalls, the price stalls, and then it starts to make lower highs and much lower lows. What happens is I usually do this as a dashed line, and that dashed line basically says, it's very simple. A close above the dashed line must be a close. Suggests that the next left side peak of importance, usually at that point is not a moving average, it's a peak, will be the next target. And if it takes out that target, you're going to go to the previous high. And because this is a series of lower lows and lower highs, you can just go step by step to the upside. Well, this is exactly what we've got now in the E-mini. Look, you've got a PD at 2,273, round number. I'll have to look at round numbers, even though it trades in quarter points. And you made a series of 1, 2, 3, 4, basically 5 power moves to the upside from lower lows. And each time it's stalled at that trend line. Let me do this now. I'm going to make this nice and big so that you can see what we're talking about. Why am I making a big deal about this? Because it's quite important at this particular stage. When the technicals have failed so miserably, if you said to me, this particular instrument was trading at 2,273 on the 13th of December. We're 3-4 weeks into the trading period. The MACD at that particular point, and I give you a number, I say it was right here, and I'll go whatever the number is. I'll show you the pattern, and the stochastic was right here, and the on balance, the blue line was right here. And now look where we are, and all I do is I cover up the price, and I say, we're over here. Where do you think the price is? And you say to me it was at 22.73. I'd say, wow, 22.73. I would put it somewhere, since it's even lower than the pattern was when it was on the 5th of December, when the price was at 21.74. I'd put it at least 50 or 60 points lower. Oh, wait a minute, we're at 22.61. We're 61, 12 points lower, that's all. So I've always talked about this as saying price is the arbiter of a trend. You can have all the technicals you want. You can look at MACD, stochastic, volume, on-balance volume, Fibonacci expand. You can do anything you wanted. This is why I always say that when a market is a major uptrend and you've recognized it, actually you could use almost any technique if you recognize the strength of the up move, because every technique should work to the upside. And you can say, oh, look at this, it's amazing. Look at the stochastic. Well, look at the MACD, look at the volume, look at everything should be appreciating. So in this particular instance, you've got price as the arbiter of the trend, and it's bumping right here into this dashed gray downtrend line, mild downtrend line. And if it closes above it, immediately you've got to say, aha, 2269.50 will be the next level. We're at 2261.50 as resistance. And then you've got 2273. And what we're looking at here is that the turnaround, you see this turnaround here in the stochastic? How the stochastic has the green line, the faster moving average, the 9-period differential, has crossed positively. The slow moving average, the red one, is not doing anything. It's way behind. It's still very negative. So you can't just do it on one instrument alone. And yet, the MACD, you can see the histogram is just slightly improving, but it's still very negative. -4, below the 0% line. And that's all basically tells me that we have limited upside. Yes, you can break out. Yes, you could even go to the 2237 level. But at some point, the upside is going to be very limited and you'll come back into the range. That's kind of what I'm looking at right now. And so now I've finished all that. Let's just get on with the nitty-gritties. The Dow, INDU, okay. The Dow has bumped into its own resistance level, pull back, and in fact, let me get rid of this because that's no more it is the case, but no, keep it there. Basically, it is the case. So what we're looking at is that the MACD and stochastic are very poor. This time the stochastic is trying to cross positive. It should try to cross positive if this price holds up for the day. But at up 32.66, it says it's got a lot of resistance in this area. If it punches right through after, say, the Fed announcement, whatever they do this afternoon, that says the next level to watch is 19,981, and then 19,987 is the all-time high. We'll see if it breaks that. All right? Otherwise, it's going to pull back. 19,859 is the 9-period exponential moving average. Let's just run the next indices before the break comes. We've got, I was asked about natural gas. The S&P, nice bounce. S&P is actually now, before it was weaker than the Dow, now it's stronger than the Dow. Yesterday it was up 16, 17 when the Dow was still wiggling around between a plus 160, sliding down to the plus 28, and then going to about a plus 35, plus 40, and the last hour just zoomed to the upside. Up 9.41 in the S&P. And I haven't drawn, I did draw it in, but I haven't got it here. Okay, I'm going to draw it in now. I'll finish some of these little drawings, or trend lines and stuff during the break. So we've got the S&P up 9, and then we'll talk about the gold, we'll talk about crude oil, we'll talk about other things, and the RSX, which is the Russian index. There was a question about it. I thought it was something very interesting I'd like to show. I'll be right back. Basil Chapman, Tiger Conditions out. Whoops, Dow's up 31, up 32. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let's just do this in one second. Oh, there's so much to do here. There's the rectangle formation in the 10-minute E-mini. Big spike up. It's almost like a single leg A. Now it's chopping in this sideways consolidation, the rectangle formation. What I'm going to do is I'm going to narrow it because that's what I like to do. Narrow it, and those are the boundaries just to watch for those of you who are trading. A close above 2262.75 suggests it'll retest the high of 2263.75, then chop again. And a break under 2259. It's at 2261.25 right now. 222.59 suggests that it'll go to the lower part of the rectangle of 2257.50. All right, let's get out of this. And we were in the middle of looking at a bunch of things. I had a question. So here's the E-mini, and here's your trend line, and that suggests that if the E-mini goes above 2266.30, it could test the 2269.50 level, but it must hold 2251. That was an interesting thing. All right, let's just do that. Got it. 2251 is key support right now. It's at 2260.75. Now, there were a couple of things I wanted to do. I had a quick question that I wanted to do. Someone wanted to look at the UNG, that's natural gas. So as I'm looking at UNG, this is the United States Natural Gas Fund. It went to a peak E right there with a silent doji afterwards. And that has to be with an upside down carrot. And it's come back very quickly. So that essentially is saying to me that within the context of this double top pattern, we've got to be very careful. This might be saying the winter is going to be a lot milder than people think. One of the things I did mention in the den, that was the question, you asked the question, is that the speed with which we've gone from the low of, in March, of 578 to the high of 973 just a week or so ago, that is a very big percentage. But you've got an index, an ETF, that's come down, or ETN, that's come down from the 2789 level in February of 2014 to that low of 578 2 years later. So when you look at the time that it's taken to cross the 9-period moving average, this thick black line, and you look at the MACD and stochastic running so sharply, price-wise, it's pathetic. Just if you're looking at the distance from the 27s down to the 5s, But in percentage terms, that's big because you're coming off a very low number low. But this is one of the quickest monthly peak Ds you can get. We won't know if it's a peak D unless the whole month it doesn't cross 973. So let's just say first week of January, we're not going to talk about it as if it's a monthly close. Just going to say this is leg D. In many ways, it's one of the quickest monthly and smallest monthly charts in the historic context of the actual full chart that I've seen in thousands and thousands of charts, going from a peak A to a B to a C to a leg D. And that suggests to me that this winter probably is not going to be quite as cold as people had thought. That's just the way the chart is looking. Okay, so now let's go on. We're going to look at the QQQ series. The QQQ series right now has been very weak. It's at 119.94. Why? Because it's got Amazon's got a number of stocks, very big weighted NASDAQ type stocks, and they are just not participating very well here. The IBB is acting quite well. And what I'd say to subscribers, we weren't going to do anything with the IBB. We're just watching it right now, is that this H pattern, this continuous lowercase h that goes to an M pattern is continuing. This is the bounce. So for the people who are doing my webinar course, the next one's coming, the third one, the final one's coming up on Tuesday night, the 10th. We've already done 2, and they're archived. If you want to sign up, you can sign up. You'll be able to get them all on archive, be able to go through them, go through the trades that we've had, all sorts of things like that. But one of the things I've done is I've spent time emphasizing how you go from a buy signal to a buy mode. Now, one of the reasons why I've done that is I wanted to show what I call the naked chart. Just so let's take this as an example. This is something real long. VRX is a simple trading at 15.48. It's up 24 cents. One of the things we look at, here's the naked chart, and I've labeled it. Here is pretty much the naked chart, just the candlesticks and the notation, and I've got the slow stochastic. Here I've got the daily chart again, same thing, but it's got the MACD, the moving average convergence. And here I've done the two together. I've done everything together, and I've given a certain template. I've shown how the MACD is moving up very nicely, and the slow stochastic is moving up nicely. Everything's in sync. You've got the little trend lines here. The 7-period moving average is greenish blue. Pink is the 9-period. And in the actual chart itself, my thinking was that it's meeting a lot of the criteria that we like to look for, and therefore there's a pattern that I talk about, the cup formation with the left side, right side price time match. This would be going to 1544, the high of the 9th of December, but I've gone all the way back in the price time match to the 1st of December, and that shows you what I call the Chapman wave inside wedge target resistance line right here. Usually it's green. We make it green. So these are things that I'm doing, and this is what I'll be doing following up, because in the next one, we start putting together your time frames. Why I like to use the 120-minute chart for the lead. And look, now we've got our leg D. Got to be a little careful here, because after this D, you could get some kind of a pullback in the 120-minute chart. This is, what's it called? Valiant Pharmaceuticals International, trading right now with a nice candle, 3 nice candles, and the MACD is working well in the stochastic. So I just wanted to show you that there are certain things that are working right now in this particular environment. There are certain chart formations that I'm liking very much, and we're kind of trying to use that for our trades and for our positions. Now let me go back here, because I've sprung to this through the IBB to show that there's a rotational correction, high-level correction going on. Some stocks are not working well. Now I had a question about the RS, not a question, it was a question in the den. I believe that Tom and Tommy got to it somewhat. I was busy, so I couldn't really hear. But once I had looked at this the other day, so when it came up, someone had called me about it. So I wanted to show the pattern that I'm looking at here. And what we're looking at is, you see this pattern on the left. You remember the pattern I was talking about, the falling axe? Well, in a sense, there was a falling axe right here, because it went to there, and it went to much lower lows there. And now what we've got is the breakout to the upside, which invariably creates some kind of a cup formation. And that's what we've got. And the RSX, which is called the Van Eck Vectors Russia ETF, made a high on December the 13th at 21.99. It's pulled back very gently and has kind of clawed its way up towards the high that was made right there. And that high at 21.99 was tested at 21.93 yesterday. Pattern I wanted to show was there are a couple of things going on here. And in my CD introducing the Chapman Wave methodology CD book, the chapter 22 talks about the drop bucket. I love to give nicknames to these things. Why is it a drop bucket? Because it forms an upside down H pattern, and it's like a backhoe that picks up all the grit and the dirt and then lifts it up and then just drops it into the truck. And that's exactly what happens at these double tops. So I'll explain to you what I'd be looking at here. And the MACD, you see, could deflect lower. The stochastic still only at 57%. And look how high it was over there. So this doesn't have the technical veracity. So we'll talk about that when we get back. It's worth looking at as a pattern because the weekly chart and the monthly charts are still very good. I'll be back. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so let's just go through this again. RSX, 21.69, up 7 cents. This is the pattern we're looking at. This is the inverse of the H pattern, upside down, sideways pattern, like a Y backwards. And what happens is, if there is a power move and this closes, it has to close. If it closes 2 out of 3 times above 21.99, that's going to suggest very strongly 2 things are happening. One is that the weekly has a left side price time match. It's above the that goes to right to the week that it made the high 4 weeks ago. And if it extends above that, then this inside, this Chapman wave inside wedge target line has a price of 22, somewhere around 22.73 as the next step, a dollar higher. And the further it gets away from the 200 period exponential moving average, this orangey color line, the more the base is right at that 200 line of 20.85 to the 9-period moving average of 20.42. My thinking here is that the black line is going to cross, the 9-period is going to cross the 200-period moving average. So this is going to be a very choppy period. Instead of an oval pattern, I'm going to put a rectangle pattern, and I'm going to suggest to you that it depends on whether you're long. Now, I can't remember what I did see the inverse. I can't even remember what it is, but I'm doing this on the core position, which is the long side of the chart itself, and that just suggests that there should be a trading range. A worst case is a trading range between 20.30 and the best case is that's the low, and the upside is that 22.50s to 22.70s, and it could just be stuck there for a little while. And if you look at the monthly leg C, it just needs 22 to continue leg C into January. Now look at that move. You remember the UNG? Look at the sharp move to the upside from the low that was made at 11.81 back in January of last year. It's a year later. And one whole year, and it's only in leg C. And look at that big move from 11 to 21. Well, that's the same 100% incline that you had in the UNG. But look at the pattern. It's taking out left side resistance level. It's a much more positive pattern. So I'm inclined to say this is looking much better. And a question came up about the EWW. I don't think I've done EWW. Whoops, on the downside. What is this? iShares MSCI Mexico capped ETF. Ugh, not looking too good. Not sure. I didn't read the full thing. I should have read it. Oh, yeah, it's upside down. This is that H pattern. That's the exact opposite. You've got the H pattern that goes to the lowercase m. So let me just show you that in my CD. And that would be, let's see, the H pattern. It has everything that I wanted. Yeah, let's go there. That's going to be slide 332. 332, there we go. Yeah, the lowercase h that can then go to a much larger h at the bottom, and that can go to an h that goes to a continuous lowercase m pattern. That's exactly what we're looking at here. This is slide 336, I think, in my CD. And there it is. Okay, if it takes out this low right here, 42.44, the EWW, whatever the heck it is, the Mexico capped ETF, well, that is not good at all. I think that Mexico won't be able to afford to build the wall if that's the case. All right, so here we are. Let's go on, and we're going to go to questions F. You know, Ford has a spectacular move. It broke out. It's in leg C in the weekly. How these things happen when they're on the cusp of breaking down is always just a miracle to me. It's just amazing. And General Motors said, yeah, Ford is looking good. Would I buy it right now? This is an emotional move. There's a lot that has to go on. I'm just going to suggest to you that the American automobiles are going to be coming back. If you want to start a position here at 13.16, it's only $1 away from where it was just 3 days ago. Yeah, you can start a position. Build a position over a period of months. That's really what I would say. You don't be in a rush to do it. Just slowly build a position in Ford and General Motors, because they're gonna get buyers. You'll see. This is I've been talking about this since 2000. I've been talking about Buy America. The pink Cadillac will be the premier car once again, as it was back in the 1950s. And I've been talking about this for a long, long time. So now let's look at this. And there's the Chapman wave. That's that pattern that I talk about, the breakout pattern right there, if I can just get this darn thing to work. So General Motors, we had a beautiful position at 33.74. I didn't want to risk it. We had another one at 36.27, which was taken out for a small loss. And then what happened was I raised the stop because I thought, hey, this doesn't look very good at all at 34.67. And we just got taken out, and here it is back at 36.82. Now, we don't have a position in General Motors, and I really wanted to have a position in General Motors, so we will do this later. So a couple of questions here. Let me just get out of what was it? There was a question. Mike had a question. I think Mike had a question. I have to go back now to try to find it. I'm sorry if I didn't say. Just type it in again because I might have missed it. Now I'm jumping around. Like, oh, Basil, your thoughts on the VIX? Yeah. So my thoughts on the VIX are this: VIX.X trading at 1209. It did go to a single leg again, yet again. The way I'm looking at this, I think we're getting closer and closer to some kind of a rally in the volatility index. But today's move down of 0.76, down 6%, when the market is down, the Dow's up 40, the S&P is up 10. That's a big 0.48 is a big move. And the Dow's only up 0.20. So I think I've got to respect that. And I've got to say, you know what? There's a chance that we could suddenly spike to 20,000 in the Dow. And that's going to really put the VIX down at the down into the 1130 area, or maybe in the 1080s. All I can do is this. I can say to you on a very short term, but now we happen to be long the volatility index. We've grabbed it near the low of the day with a very tight stop. We did that the other day, which got the exact low, and it had a spectacular move. We got out after the spectacular move with a nice game, but nothing like it was. So you've got to be very careful with these things. And I've got a very tight stop on this. And I'm not messing around. And one of the reasons is, my thinking is, if you don't mind, I'm just going to go jumping around a little bit. I'm going to go to the Dow, and I'm going to say to you that resistance line that we're looking at right there, that same resistance line we saw in the S&P, we saw in the futures, that's going to be very telling. Most of the time, these resistance lines last for a little while. And you take a lot of time consolidating before you break to the upside. So that's all I can say. That if the Dow and the S&P, let me go to the NYA, finishing our look at the different indices. Now, that's going to be very interesting because the New York Stock Exchange made a new recovery high at 11,256 the other day. To me, you remember, I did a session on this. I showed the monthly. I showed you, in fact, it must have been yesterday. I said, the uh-oh has become, no, it's woohoo. And that is the New York Stock Exchange is improving. In fact, I haven't mentioned it for a little while. I did mention it 2 weeks ago, and then I kind of forgot. But the New York Stock Exchange is becoming, in its own way, a little bit of a leader. Very quietly, because most people don't even look at that. So I'm looking at this and I'm saying, I love the action. I love the MACD going to 90, the MACD crossing positive, the stochastic at 95%. This is very positive for the NYA. And the more I look at that as a monthly, remember, anything can happen during the intra-month, I'm saying this is a good bellwether for what's going on. I'll be right back. Basil Chapman, Target Technician Zone.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, just finishing this up. BX was a question. Blackstone Group, Blackstone. BX Blackstone Group up again. Basil, any projection on this puppy breaking out of rectangle? No. Yep, it's actually looking very good. The question is, would it go to the 37s? 37s, I just go one step at a time. And that step says that the first resistance is at 31.87. So it's 2 points away. And yeah, I like it. I think this is in the area that seems to be appealing to investors right now, to fund managers. So it's looking very good. ABC, I think it'll go to leg D above 30.25, and it should do that within a few weeks. Yeah, it's looking very. And there's a Chapman Wave falling axe. I just drew that in right there. Breaking it out, you should have at least a 1-to-1 to the upside. That's the projection of a falling axe formation. So yeah, BX is looking good. 29.63 up $1.51 today. All right. Question is, Sarah wants to know about GS. You know, I think Goldman Sachs and the financials are just stuck here a little bit. Maybe today's news with the Fed will be the breakout or break up for them. To tell you the truth, I just feel right now that if you want to be in the financials, your best bet is to get your foot in the door right now in case they get away from you, saying, you know what, it's just not the time to be investing, but it is the time to be nibbling. My investing would be if there's a really nice pullback over the next 6 weeks and you finally get Goldman Sachs down at 241, down into 232, 226 area, then I'm going to say, hey, you know what? Now's the time to be putting your foot in the deeply in the water, more deeply in the water. And if you're looking at the XLF, acting very nicely. There's just nothing wrong. Sideways consolidation might be using time and starting a breakout. Again, 23.61. What's your risk? Your risk is maybe 14%. So don't get carried away, but you can start a position here. Can it retest the 22 level? Yeah, it can. I would love that. But it might not. It might just make slightly higher highs and slightly lower lows, because the slightly higher highs and slightly higher lows, because it's in the area of favorability right now. So you've got to be, it's just, this is one of those cases where if you're looking at a chart pattern and it's fantastic, you've got to say to yourself, either this is just not my type of stock, this pattern, I just cannot do it. Or you say, you know what, I don't mind putting my foot in the water now. If a small percentage goes up very nicely, I'm not complaining. A profit is a profit. It says that I've also missed the bigger position, but at least I'm in it. So that's what I'm saying. That you realize that the XLF, the S&P Select Financial Spider ETF, trading at 23.61, only has to go to 23.88 to break out, and then I have to start counting that in a different way. But if it starts to pull back from here, a lot of people have missed this. It's going to have good support all the way down. So I'm just thinking you put in a bid, you nibble here maybe, you can put in at 22.50, and then just some outrageous thing like 20 20.20 for that flash crash day that might happen. Who knows? Just the way I would look at it. Copper, good question about copper. We haven't gone there yet. I don't think yeah. Wow, nice move in copper. Held, I believe that this is I've been experimenting a little bit with this. This is the 50-period exponential moving average. Held it beautifully. Very strong move in the daily. Weekly still says chop, chop, chop. Sideways range. Monthly says great takeoff from the low. Below 2 has gone to the 270s. Now at 2.55. It's had the consolidation, and maybe this is the place to be looking at it. What is it? JJC or CCJ? I'll say CCJ. I own iPath Copper ETF. Yeah, this iPath JJC is acting quite nicely at 29.40. It's just saying maybe this consolidation is done. Yes, there is an island gap, but you know what? When you've got something that trades overseas, you get these gaps. Now, I haven't done the dollar, so I don't want to get carried away here and forget to do what I usually do. The dollar trading right now down after a leg. Now, it's a possible peak in. I spoke to Tom about this in an interview. What is today? Yesterday, I think it was. And I said this pattern is very familiar pattern. It's the expanding cone formation. And sometimes these things, when you bump into resistance, you can go all the way from the top of the trend line to the bottom of the trend line. And that might be the case here. And my thinking is that gold and bonds could have a little bit of a counter trend rally. Are we trying to trade the gold stock and the miners in this particular manner? Seems to be working okay, and we'll see what happens. So the dollar at this particular point must hold 100. Let's call it 101.50. It's at 102.58. It's got 1 point down. Breaks below that. It says it'll give back quite a bit more because 101.44 is the 9-period exponential moving average. Let's look at the EUR/USD, the euro currency pair, and that's having a bit of a bounce. So this is now in a leg F to the downside in the weekly chart. From a leg F, you can always expect that this is an area where it really desperately tries a very quick E to F. That's going to be the case to say, especially remember I spoke about this yesterday. I said in the monthly chart, this is the opposite of the dollar's Y to double Y pattern. This is that drop bucket pattern. And this is the H pattern that goes to an M. But the bar that takes out the left side low, you have no more than maybe another bar to break in and then close nicely above it. That says you could have a rally. So this is exactly the point. The only reason why I wanted to go back and try for the short position of the indexes via the volatility index is because I'm looking at this and I'm saying I'm getting some kind of a sense of, even if it's just short-term trend changes, let's see how this plays out through the week. And that's really what I'm doing. So that's what I'm looking at, and I hope that helps you, Sarah. And the other thing is XOM, and I can't remember, I can't see who asked that question. I think it's Julie. Yeah, Julie asked about XOM. So XOM is where? XOM, which is ExxonMobil. Okay, this is exactly like the copper chart pullback, and now this is going to a sideways consolidation. The candle that we're looking at, you see, when you've got the MACD and stochastic so negative, it does limit the upside. And that's the reason why I'm saying that in the Dow and the S&P, with that kind of pullback in these technical indicators, it kind of limits the upside. And that's what you're seeing ExxonMobil stuck in a rectangle formation with a chance that it might break the bottom part of the channel, the sideways channel, the rectangle. And if it does, it'll take out 89.76 is trading at 90.22, down 67 cents. And then it fills the gap. And that gap has a low of 89 round number. So I'm thinking Exxon, CVX, I think, is there a question about CVX? Yep, CVX. What leg are they in? And now this is a little different. This is at a chop, 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 ABC kind of. This is already sideways with the upside. It's very interesting because although they trade kind of together, CVX, which is Chevron, and ExxonMobil actually have trends together, but chart patterns are a little bit different. And Chevron's been a tad stronger than Exxon. You remember I mentioned that a few weeks ago. And here it is at the upper level of the consolidation, still with negative technicals saying that the upside could be limited. But in this case, I think it's going to squeak 118.99. 119 round number, 119, I think it's going to touch 119.09. and then we've got to be careful. Then I think it might be pulling back. So let's just be watching this remind me again in the next few days. So now I think we've done that. STZ, I want you to do. Nobody asked about it. I asked about it. This has gone to a leg. This is very interesting. Constellation Brands, A, Spirits, etc. Made a peak, E in the monthly. Finally, after this one of the most spectacular moves that you've ever seen in any stock, going from the teens to the 160s. I'll be back. We'll talk about it. Dow's up 38.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
The remaining few minutes, let's just do a couple of things. Question about UA, which is Under Armour. Yeah, is this one of those that are the most spectacular move, and now it's kind of replenished and now maybe become at least a counter-trend favorite? Would I want to buy? Well, it's at 26.60 right now. It's up 84 cents. I'm just going to suggest, if you really want a safer buy, I don't want to see a pullback below 25.50. I'm going to suggest at 26.61, take a small position. And I would stay with a small position until you get a lot more evidence in the weekly chart that it's actually turning around. And we'll look at it in 2 days' time. So start at 26.61. Don't have more. Small position means you can have a 10% or 8% if you want, if that's cool with you. Normally, I would actually not. I'd put my stop just under today's low of 25.96. So that's like much less, a much smaller position. So small position, stop underneath today's low. If it manages to push 20 cents higher, raise that stop accordingly 20 cents, and just get a feel for what it's doing. That's Under Armour UA trading at 26.63, up 87 cents. Next question was transportation. So if you look at the IYT, and this is really a clue for me, see, it's not participating. This time the MACD has gone down, and it's got the falling X, and it can't break out. As I said, falling X, very often you want to go, it takes time for these to unfold. So this has taken over a month, and it hasn't broken out. And there's a peak E in the weekly chart. I suspect that the transportation is telling us that we're getting to a very difficult level in the overall market, very selective, somewhat limited upside, and the previous really weak links are the ones that seem to have power right now. So I hope that helps you in that particular instance. And KSUG, I don't remember if I've still got this notated. No, I don't. Whoa, KSU is not good at all. Don't touch Kansas City Southern. It's just not looking good at all. And it's breaking under that previous low in the weekly chart. Whoa, nothing here. Nothing here to see, folks. Okay, now let me do this. We've got a moment. A couple of questions that I know I've forgotten. Did I look at gold? Yes. So gold is moving higher in a stair-step way. There's nothing fantastic here. If the dollar does pull back, and I still see big strength in the weekly and monthly, so it'll just be kind of a breather that it's going to take. Gold actually should be doing much more. Today should be not 2 points up. It should be at 1173, somewhere at least 12 points higher. That's the way I'm looking at this. So we do have gold stocks. We do have this. I think that something like a GDX is acting way better. Look, the GDX, it still needs to go above 22.24, and then we start leg B, and then I'll make my decision based on the MACD and stochastic, whether I'm going to say it's going into a buy mode with an up arrow. But at this particular point, it's acting quite well. That's all I can say. It was uranium that was JJC. You want to look at URE as we're going out here. Whoa, that's very strong. URE, which is Ultra Real Estate Pro Shares. URE? Oh, two different questions, different people. Okay, URE, it's looking very good. This is Ultra Real Estate Pro Shares. So someone said something about uranium, and it had a U, and it had an R, and it had an E. So, okay, it's looking very good. At 117.44, support is at 100, on the 200-period moving average is at 113. Folks, there's still time. If you're interested in my webinar, the third one, this is how we're putting things together. Look, yes, look, it's even higher now. This is the trade, the latest trade we put on based on how you go from the naked chart to the stochastic to the MACD and the stochastic, how you can put them together, and then how do you put them together in terms of relationships, in terms of daily, weekly, or in this case, it would be the 120-minute chart, having just gone to leg D in VRX, trying to go for 1593, the 9-period exponential moving average. Days young, it's hit the 200, it's hit the rising trend line resistance. It could still pull back quite sharply, but these are the techniques that we'll be studying, and we're going through, and I give exercises in. It was URA. All right, too late. We'll do that tomorrow. Thanks for being here, folks. Check out my opening call. I think you'll find it very interesting and hopefully enlightening and success. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,